I'm Matt Bishar with NAREIT, and I'm here in London at EPRA's annual conference. So what topic better to discuss than the Canadian real estate market? Michael Brooks, CEO of RealPAC, thank you for joining us.
My pleasure.
Last time we spoke, you had discussed how Canada stood out for having weathered the economic crisis and the financial storm, better than a lot of other markets. Where are things now?
Things are still strong. Our banks were the main reason that we didn't have any financial meltdown, and we still are in fantastic shape from a bank lending point of view. Commercial debt is plentiful and available. You can get loaned a 60 to 70% loan to value these days. Pricing is less than 200 basis points over Canada's. 10-year Canada's are at less than 2.5, so you can do a commercial loan at less than 4.5 today.
And focusing on commercial real estate, what about property values, fundamentals? Have they held up just as well?
For prime office, prime retail, we're in an auction market, multiple bidders, 10 to 15 bidders for good assets. Cap rates in some cases are lower than they were ever at in 2007 because you still have positive leverage with your cost of borrowing. What we're seeing a little bit more of is the REITs starting to be much more dominant buyers. Back in the mid-2000s, they were often outbid by the pension funds. Now the pension funds are going global. They're going to Europe, they're going to Brazil, they're going to Asia.
And you lead me right to my next question. We've seen some Canadian REITs, like RioCan, really aggressively expand into other markets, RioCan into the US. What is driving that trend, and do you expect to see more of it?
I do expect to see more of it. I think it's early days. There's probably only 3 or 4 REITs that are currently aggressively buying outside of our borders. The other ones seem to be able to find product in Canada that meets their investment criteria.
Looking at 2012, what looms as kind of the biggest challenge out there?
I think that the biggest challenge will be continuing the good times. The access to debt at very advantageous rates, the access to equity markets. With this recent dip that we've had, every part of the market has pulled back, including REITs, but the REITs are still among the best games in town from a yield point of view, and they are bouncing back because the fundamentals of those underlying assets in those REITs are just so strong. We have some legislation we're waiting for that will loosen the rules a little bit for the REITs, and we're hopeful that that will come through this year. It's a shopping list of technical fixes that'll help us have a little more latitude, not as much as the US REITs have, but a little more latitude, enough to make our REITs comfortable doing a little more creative things in terms of their acquisition pipeline. So I think it's keeping the good times rolling. That's a challenge here next year.
Great. Well, Michael, thank you very much for talking with us.
My pleasure.
Great. For more on this and other real estate news from around the globe, be sure to visit REIT.com.